Hello everybody and welcome to the midweek market update from Smack the Markets for the 16th of April. So in this shortened trading week, the markets have generally been fairly sort of buoyant, certainly US stock indices in any case, seemingly almost discounting any sort of further bad news whilst they're trying to sort of grapple with the whole impact of the coronavirus on world economies and also worldwide markets as well. Now, one very big important piece of data is coming out later on today, and the markets are surely going to be paying some very, very close attention to that. Now, that's the US initial jobless claims. The number, of course, not expected to be particularly sort of pretty. So let's take a look at how the markets have fared that we discussed on Tuesday of this week and some of the opportunities that we're taking a look at going into the second half of the week. So if we come along to the Dow here, this is a Dow futures contract, and just remind ourselves of where we were on Monday. So, on Tuesday of this week. So what's happened so far is that in thin trade, whilst a lot of the traders were on holiday over Easter, the market did manage to sort of push up to this 24,000 level. I suggested at the time that there was divergence sort of indicating on some of these time frames, and that these markets are at some real key sort of potential areas. So if we just, before we discuss what's happened and next potential moves, let's just come and remind ourselves of how the market looks on the macro picture here. So this is the weekly time frame, and we can see that at the moment the market sort of up here, it's sort of retraced 50% of the coronavirus crash. So this is the crash associated with the coronavirus pandemic. The markets retraced 50% of that at this moment in time. It's also right in between two sort of structure levels on the weekly time frame, and you can see that the lower level here around 23,326 is a level that the market put in some structure way before we ever had sort of COVID-19 issues in the markets. There's also another level here which is also very important, and that's around 24,156. So it's it'll give or take a little bit on these time frames because there are more zones, but you can see that just above 24,150 there is a real sort of key structure point there, as indeed there is a lower one as well, and the market's sitting, well, sort of interestingly, it's that sort of 50% zone has been right in the middle of that sort of trading window. So if we take that information and bring that down to the 4-hour time frame, and we take a look at what's happening here, that 23,312 level, I've got it marked in here because it's a little bit more preciser on this time frame, but that's close enough to the 23,326. We've got 24,000 up here as well, where the market's also sort of found key support and resistance on lower time frames here. And you can see that the market this week has managed to retest the 24,000 area. The market hasn't been able to get above there, and we've seen more weakness coming in. Now, the challenge with these markets, particularly US indices, is that they're very much being driven by news announcements and news announcements that are non-scheduled, so stimulus being ploughed into the markets, and that's what's also sort of been helping these markets rise. Now, at the moment, what we can see is that we've got two very, very decisive decision points in the markets. 24,000, obviously, big round number as well. We also know it's around that 50% retracement of the initial move, and we've got 23,312. So at the moment, we still have divergence in the markets. We still have weakening momentum. I'm looking at this, that if the market sort of takes out these lower levels, in fact, we can probably sort of look at things a little bit lower here and consider these lows just underneath 23,300. So once the market sort of gets underneath these levels, then I think we'll start to see a break of these trends on these 4-hour timeframes, and we'll start to see some filling of these trading windows to the low side, possibly sort of getting down to testing 22 or even 21,000 in the near term. Obviously, if the market does pick up some momentum here and we take out 24,000, then we could be starting to see some strength to the upside. But my sort of preference here is I'm looking at more sort of weaker prices here on US stock indices. Now, we also discussed gold on Tuesday. So if we come and have a look at gold, what we were looking for here was for opportunities if the market could actually sort of pull back into the sort of level here around 1744. Now, at the moment, the market has retraced back into 1744. It's found support here. It's sort of been grinding sort of sideways here, and we were looking for a move yesterday, and that was the expectation, but the market just couldn't pick up any kind of momentum yesterday. So there's the first warning sign. We've now sort of started to get a little bit of momentum coming through here, but this is looking a little bit sort of weak, and there's certainly no sort of strength behind these moves at this moment in time. We're still keeping an eye on it though. If we could get some kind of tight reward to risk opportunity, we may be looking at some positions in here later on, but at the moment bracketing this range here only gives us about a 1-to-1 reward to risk before the market gets up to the highs, and we like to be able to take much more than that or have a much higher reward to risk on any sort of potential move. So we're still liking gold long, but at this moment in time looking for the right type of entry. Now, if we come and have a look at Kiwi dollar, which was the other forex market that we discussed on Monday, and we have a look at this here. On Monday, what we were looking at was the fact that the market was strong. We were looking at continued opportunities above 61 to close this window up here towards 62 on the higher time frames. As we can see, you can see that the market just didn't play suit, and we've had that roll over here in the Aussie dollar. It's all been about the US dollar that caused this move. Take a look at the 61 level here on the 4-hour time frame. You can see that we haven't had the market sort of barely broke through. So it broke through, it couldn't make a new high, and the market sort of failed from here. So that trading window there is left, and at this moment in time we're not looking at opportunities on Kiwi dollar to the long side. I think if anything at this moment in time there is a big question mark over the dollar. It's retraced back to that 100 level, and the big question is whether we're going to see strength in the dollar or whether we're going to see sort of weakness. It really is at a key decision point area at the moment. So other markets that we're also keeping an eye on as we're studying the dollar at the moment is markets like Euro Swiss. Now, Euro Swiss for a long time here has just been sort of grinding sideways, as you can see here on the 4-hour time frame. It's just been sort of hovering around quite a significant sort of price point. If we take a look at this on the monthly chart, you can see where we are on the monthly. The market's been up against a historical level, which we've been waiting for the market to get through, and looking at opportunities either way on this. In fact, the market's now sort of broken through that level. So again, if we come to the weekly chart, we can see that we've got normal price action here in the fact that the market's made a breakthrough, it's retraced back to it, it's rejected that level, and we're now starting to get the continuation of the trend. So again, if we just sort of zoom right the way out of this, you can see that we've sort of broken through a very significant level there that we saw similar on the monthly chart. There's probably a bit of a weak zone down here to around sort of 104, but there's certainly plenty of distance to the short side. I mean, below 104, there's possibly sort of down here to around 103, but there's certainly plenty of distance to the short side, and we are sort of getting into, as the market continues to weaken, we are getting into more and more sort of clearer space. So lower time frames, sort of pullbacks into sort of moving averages, and the usual sort of techniques that we use are the types of techniques that we're looking at for sort of positioning on sort of lower time frames. So there's a few markets there that we're keeping a close eye on in the trading room going forward into the remainder of the week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.